Hello, good morning. This is Jinen Gala presenting for Business Valuation. So the first company that I've selected is Tata Power. So the reason for selecting is it has stable demand and revenue stream. The cash flows are predictable and the dividends are regular. Infrastructure and long-term investment, because the assets that are required are already purchased by the company. The government is also supporting the industry because like for India it's moving towards being a developed economy, so the government support is very high. The technological advancements are there, renewable energy is coming in, and also that because of the diversification of the portfolio, the risk would be reduced by considering this sector. So the macro analysis of domestic, so economic factors, the India's economy is growing rapidly. Also the regulatory environment, again the government policies like Ujjwal Discom Assurance Yojana, Uday and the Saubhagya scheme influence power distribution. Then the global again geopolitical factor, technological advancement, economic factors, environment and social impact, future outlook, and these all are the factors. So industry analysis, India is the third largest producer and consumer of electricity worldwide. So India's power generation witnesses highest growth rate in 30 years in the financial year 23, and this is supposed to increase more steadily because of the urbanization that is going on in the country. So some major investment and development in India, as we can see over here. So the Adani Power is exploring to invest about $3 billion in Vietnam seaport ecosystem and wind solar energy product for renewable. So Mumbai headquarter SR Group is formed to invest about 3.6 in developing a range of low carbon energy transition project over the next 5 years. So the company specific analysis, if we consider, Tata Power consolidated revenue increased roughly about 29.5% to 141 billion. So strong operational performance and regulated. So the main contributor is Mundra in this. The profit significantly increased also in the Indonesian coal business by Tata Power. So the revenue, as we can see, increased over here. The EBITDA also increased from 42.9% year on year. The company's planned 4 gigawatt extended module and cell capacity is expected to be rolled out in September. The key positive is PAT grew by 91 CR. The key negative is EBITDA margin declined by 6.7%. So valuation and estimation for the company. So I have taken the number of shares that were outstanding, the current market price. So in this way I calculate the market capitalization. Also the PE ratio of Tata Power is 22.02, whereas of its rival companies NTPC, Power Grid, Adani and Adani Power and Adani Energy are over here. So the industry average is 25.38. So the ratio is less than the industry. So it makes sense to hold the share, as we can see over here, because the industry is 25.38, so the share is undervalued. So obviously holding on to the share would make more sense. So short and long run, the Tata Power has restructuring and high growth business over here. So the revenues are also going to increase. So we should keep the stock. So the second company I have selected is Tata Steel. So the reason for selecting is global demand of steel, infrastructural development. It is cyclic in nature, a technological advancement that is going on, and again dividend income. So macro analysis, again India being an growing economy, so these are the two core factors like that are required for infrastructure. Even the raw material availability is there in India, so which are required for making the steel. So even that's one of the important factor to consider. In global analysis, the global economic trends, the Tata Steel operations are affected by the worldwide economic trends. That is almost for all of the companies. So going on to the industry analysis, the past 10 to 12 years, India's steel sector has expanded significantly. Production has increased 75% since 2008, while domestic steel demand has increased by almost 80%. In the financial year 23, the production of crude steel and finished steel stood at 125 metric tons and 121 metric tons respectively. So going on ahead with this, these are some more data about what has been going on in the industry. So the Union Ministers India announced that Japan is eager to invest $5 trillion in various sectors in India, including steel. So that is one of the good insights to the industry. Tata Steel also signed an agreement with ANV Global Mining to harness new business development and deliver mine technical service. So these are some more of the information, like JSW Steel invested around 150 billion to build a steel plant in Jammu and Kashmir to boost manufacturing in the region. So going on to company specific analysis, it is one of the largest and the cost effective steel manufacturer with strong material security, which ensure adequate and timely supply of the raw materials. So it offers a wide range of flat and long steel products. So the key downside risk it relies heavily, about 85 to 90% on the domestic merchant or imports for its coal requirements. So increase in price could adversely impact its margin. Also, the UK operation continue to be a drag to the Tata Steel. So valuation estimation for the company, again the number of shares that are outstanding, the current price, so getting the market cap. The PE ratio for Tata Steel is about 86.7, and for its competitor JSW Steel, Hindalco, Jindal Steel and NMDC are here. So the industry average is 13.583. So we can see the ratio of Tata Steel is very high. Obviously you should not be holding it on a short term basis, but since the fundamental of the Tata groups are very strong and it looks like a promising industry, so I would suggest like we need to hold on to Tata Steel in the long run. Yes, but obviously for the shorter run, if we compare the PE ratio, it doesn't make sense and it is very much overvalued at the moment. But as per me, I would keep the share in the long term. So that's about it. Thank you.